deeper look into silver investment demand. So it's time for us to find the finer nuances of silver investment demand with the experts that are joining us on the stage now. This session is being moderated by the Principal Consultant for Metals Focus, Mr. Chirag Sheth, inviting Mr. Chirag Sheth onto the stage. The panelists putting in their experience and wisdom towards this subject are Mr. Chirag Thakkar, Director, Amrapali, Gujarat, inviting Mr. Gagan Bhai, Senior Vice President for Consumer Business, MMTC PAMP India Private Limited. Also inviting Mr. Navneet Damani, the Senior Group Vice President, Commodity and Currency Research Head for Motilal Oswal Financial Services Limited. Inviting up next the Group CEO of PAMP Holdings, Mr. Manit M. Shah. Inviting next Mr. Faisal Ahmed, the Managing Partner and CEO for AKW Consultants. Ladies and gentlemen, at this point, I must inform you that the AKW Consultants is the first accredited LBMA assurance provider in Middle East and India. We must give them a round of applause for this, please. And inviting up next, Mr. Amit Vashisht, the head for passive and digital business for UTI Mutual Fund. And last but not the least, the national sales head for lead and silver for Hindustan Zinc Limited, Mr. Nalin, Goel. As these gentlemen take their places up on the stage, I leave this session with Mr. Chirag Sheth.
Thank you. Good afternoon, everyone. We've got an interesting panel out here and to discuss a topic, silver has had a fantastic ride last year, and one thing which really drove that was massive spike in investment demand. And I think what we're going to do today is basically talk about how silver investment demand obviously has shaped, but what does the panelists think of future. But most importantly, I think it is important for us to understand is that at the forefront of the global rise in silver investment is India. To put things into perspective, last year roughly 6,500 tons of silver bars was bought by retail investors, out of which roughly 2,400 tons were bought in India. About 2,400 tons thereabouts coins were sold. Roughly 25 to 30% of that came from India. So if you actually look at India is one of the largest consumers of physical silver product. If you also add to ETF flows that we've seen last year, roughly I think 2,400 tons of ETF flows were there. So actually if you look at the Indian market, we are a phenomenal buyer of silver. Let me probably start with Chirag here. How do you see the silver investment demand shaping now? Over the last probably 5-6 years, we've seen sustained growth coming in silver investment. Probably we'd like to understand from you that from which pockets are these growth coming in? What kind of consumers are actually buying it?
Thank you, Chirag, for this wonderful question. So, in order to understand the current scenario of investment demand, we'll just go 2-3 years back or maybe 5 years back. So there is an above the ground physical silver, which is everywhere. Wherever there is a physical demand, where there is a physical silver market, there's an over and above ground silver, which keeps rotating within the cycle. So since last 5 years, if you see, that cycle usually comes into the market and goes. Now, since last 5 years, that cycle is not coming in. So let's say if you bought some physical silver in 2020 or 2021, it was likely to come that, okay, now the prices have come up, let me sell it. Right? Let's have a profit booking. So that profit booking ratio has gone literally maybe 20-25% down, right? So that is first most factor, that if the silver is not coming out of the households or wherever the investment bars are or the coins are, it will create more demand because that cycle has not been churned. That is one point. Second point, the new millennials, the new customers, the new clients, the new investors are different from what we all are today. So they don't want to be like, okay, I bought it today, I want to sell it tomorrow, right? So that profit taking is taking a very leap down. So that is again creating more of an investment demand. Thirdly, uh, since last 3-4 quarters, we have seen the kind of a FOMO. Okay, main reh gaya, I've missed the bus. Now what I'm going to do, right? So we missed the bus from 75 to 100K. Someone missed the bus from 100K to 175K. And almost negligible people would have bought at 275, but there are lots of investors who bought at 400K, expecting that now I'll have 500K or 700K coming in, right? So that FOMO built a investment demand in last 3-4 quarters. At the same time, the people who bought at higher prices, investors who bought at the higher prices, they are not a short-term investors. They are a long-term investors which would want, okay, now if this is the case, I'll try to average my investment, and they don't want to exit. Because the kind of a scenario what we had 15 years back, that prices went to $50 and then it crashed till $20 it came in. That is not the time right now. Because the kind of a scenario, the kind of a factors what we witnessed in 2011, it is something different in 2026 now.
You mentioned about the new age investors, right? So would it be safe to say that a lot of this demand has actually come from young investors, or do you think a lot of this demand has come from ultra high net worth individuals or seasoned silver investors who've always been buying silver?
No, the trend has changed. So I'll just on my platform experience, I have a 70% of people buying silver, which is in the age of between 25 and 35. And on the ultra HNIs, I believe ETFs have a lot of family offices coming in and giving the flows to them. At the same time, PMS is also taking place, wherein ETFs getting more and more popular. There are more investors coming in through PMS network, through wealth management network. So those are the changes and the shifts as what has been happened.
Amit, actually, if I can ask you, since Chirag mentioned ETFs, right? We've seen ETFs have actually a phenomenal rise. If you look at in last 3 years, from the first year of 120, 140 tons to today, significant holding jump that we've seen. How much of it is due to young investors using SIP route, and how much of it is institutional, ultra high net worth individuals?
So I just split into two. First is retail and then definitely institutional. So when last time we met, our industry aim was 15,000 crore, which is a year back. Today when we are talking, it is 85,000 crore. So that clearly reflects 6 times jump. In my 18 years of career, I have not seen any asset class growing this way. Second, on the retail side, last time when again we met, we have close to 6 lakh folios. Today when we are talking about is close to 56 lakh folios. So within 1 year, we have added 50 lakh new folios. So that clearly shows that retails are coming in this ETFs. And I must thank the platforms, because ETF is quite easy to buy. And our ecosystem is so good that we are able to supply that at any point of time. So that's, I think, it's a great opportunity, and thanks to all our back-end partners. People are talking about ETFs, but it is the back engines like Augment, MMTC supplying Goel, lot of market makers who build this for us. So it's a proper ecosystem which developed in last 12 months, and I totally agree with Chirag Bhai that now the ecosystem is there, and I'm sure, obviously not that kind of momentum we'll see, but this asset class is going to be stay there.
Gagan, I'm going to ask you a question on coin market, but I also want you to actually comment on the bar, because you come from MMTC PAMP, one of the largest refineries in India, right? What kind of bars have you seen really fly off the shelf over the last probably 6 months? Is it large bars, or is it been mostly kilo bars? And also, if you could, kind of shed some light on the coin market. Do people use coins for investment, given the fact that silver prices have gone up so much?
So, Chirag, what we've seen in the last 3-4 quarters, like Chirag said, there's been a huge shift towards half kg and 1 kg bars. And most of the investors are actually the ones like Chirag also touched upon, are the people who are young. We've seen there are young people who are buying through our apps and through our retail centers. And the shift is actually to half kg and 1 kg bar according to the pocket size. But we've also seen people who have bought coins, yes, but it's more usually 200, 250 and 100 gram, not less than that. The shift to coins is, yes, not that much as against the bars. There has been real huge shift. The numbers are tremendous.
But do you think most of the coins are only bought for gifting, or do you think a lot of probably lower middle income people use coins as a form of investment?
Yes, people do. Those are 50 and 100 grams. Yes, people do. But then 10, 20, 31 grams, 1 ounce, these are usually for like a puja or maybe for gifting.
So from your point of view, the large denomination coins that you mentioned, right? What would be a rough split? You know, are these 10, 15% of the market, or they are much lower than that?
They're higher.
They are much higher, right? So you're saying there is a clear shift which is happening towards coins as an investment as well. Okay.
The big ones, 100 grams to 50 grams kind of.
Right. Navneet, you come from a financial side, right? How much of, the whole arbitrage opportunity which is available, or how much MCX has played a role in aiding silver investment demand in India?
Well, I'd like to touch upon a couple of things. Firstly, introduction of the product, which was only for AIS and Ultra HNIs about few years back. Then came ETFs. Then number of ETFs increased. SEBI regulatory framework became tighter, so it gave us, or maybe not only just MCX, but market participants also confidence to invest into silver as an asset class from a medium to long-term perspective. And to top it up, investor interest garnered much of attention from 2024 to now because prices started to move. And when prices started to move, and when equities and other asset classes were not giving you kind of returns that were available, people start to chase what is moving fast. And silver moved beyond most of us would have imagined. 200% kind of a return in one single year is not what we were discussing when we were at this forum in Udaipur last year. Okay, and as Amit mentioned, number of folios indicate what kind of presence this market has had. So MCX in a large way has played a large role. And to top it up, they have different contracts. For smaller investors, they have a 1 kg contract. For medium investor, they have a 5 kg contract, which comfortably people can trade. And for larger traders, they have a 30 kg contract. And options were available for the last few years, but they garnered momentum only in the last 1 year. And they have become reasonably and more active than what we were in terms of any other asset class on the MCX platform. So we've seen, as a broker, we've seen a lot of transition where people are buying ETFs, leveraging their ETFs and trading silver once again on the commodities front. So there's people, because of the opportunity that was available, 2x kind of a leverage were being taken, and money was available cheaply, loosely and quickly on the table. That is why MCX came very handy as a platform. But from my understanding, this has been the nature of silver. It has been volatile. The exchange, other than in Indian terms, no other exchange has the kind of depth which MCX is providing in this point in time. So it makes a reasonable amount of sense where they could look to have a smaller denomination contract beyond the 1 kg contract also, which could be for more niche and more smaller participants who want to enter the market at this point.
But do you think probably the fact that MCX volumes have increased so much, options have come in, has that to some extent impacted physical demand as well? Do you think that has happened? Or that is something that you don't think that both consumers are, or both players are separate?
Well, I think at the start you spoke about number of bars and coins which have sold in the last 1.5 years. Chirag Bhai was also talking about what was the type of drive he's seeing on his platform. And young investors are very savvy. So if they have a leverage product where they can invest 20% of capital and make about 70-80% returns on their existing capital, so they choose this kind of platform also. The beauty is price have to move in what you are anticipating, and that is where MCX came in very handy in the last 12-15 months, where prices moved significantly quickly, and you have the opportunity to trade multiple contracts through options and futures. So I think it's not a framework where only MCX will be available to trade. It's physicals, it's bars, it's coins, jewelry, and as well as ETFs as a platform where investor interest is very, very high at this point.
Perfect. Nalin, if I can come to you. I had two parts question. Firstly, as a mining company, right? When you see these kind of massive jumps, in demand, how do you actually adjust your production to that? And second, I want to understand in last 6 months, especially, between probably, let's say, September to Jan, Feb, where did you see demand coming in from? Did you see a lot of your rural buyers actually buying more, or was it urban?
So, as a mine producer, we have always been with the mindset that we have to maximize our production. Because somehow our bread and butter comes from mining and then, converting that mine to a finished product, and then that goes in the market. So the philosophy wise, we have never thought of, tuning our production with respect to the prices in the market. Rather, the thought process has been that whatever I sell in the market for the month goes on the best price possible. That we have been doing via the auction methodology, which most of the market knows. For the past 6 months, we have been trying to read the market. We have been trying to, best auction the product that we have, which is only 30 kg bars at present. Because when we started silver, we positioned ourselves for the, bullion market, jewelers, the, large scale buyers, which you say maybe investors for a bulk volume. So today we see that transition happening where investment demand is coming from the younger generation as well as the generation which wants to diversify the investment from maybe equities and the other markets to physical assets like silver and gold, because they are able to see the returns they have generated over the years. So we are also very much encouraged to study ETFs and smaller denominations and understand what we can do as a producer. So agnostic of what we produce, the more important part is that, what more products we can add to our portfolio to adjust to this requirement coming in.
And what about, what regions of India did you see demand coming in for?
For us, we have seen the western demand being the most strongest. So if you say Bombay, Ahmedabad, that has been pretty strong. Then next is the north. South has been an area where we have been supplying very limited. But then again, now we have a focus to, cater more to South also. While we have 3 warehouses over there, we do want to increase our presence over there, considering that there have been a lot of traction in silver of late.
Sure. Manit, if I can, get your view in. So basically, we've seen obviously India, pretty strong, right? But we've also seen a lot of other markets actually where silver was not really talked about do well, right? From your vantage point, sitting in Dubai, right? How have you seen probably in the Middle East, but also maybe other regions, how has silver really picked up?
The Middle East has predominantly been a gold market, and 2025 changed that, because of the bull run that happened. We were talking about the India story and how the investment in India has really gone up. But Middle East was the sort of silent player where there was a 300% growth in silver investment. Of course, starting from a smaller base, so that was a bigger number. But that number is, growing and expected to grow even higher. And of course, we saw demand across the value chain. We saw demand from family offices, institutional investors, and a lot of retail investors. A lot of Asian expats, and also silver has a lot of, cultural and aspirational value that adds to the increase in demand. So it was across the region. I would say Turkey leading the market. Then we saw a lot of demand, of course, in UAE, in Saudi, Qatar, Egypt, Iraq. So we saw a lot of silver demand across all of these markets, which are new to silver. And that was very heartening to see. And we heard on the earlier panel that international refineries have been really full. And that is part of the reason that was driving that. And going forward, we expect the same trend to continue to build.
But you were saying you're still seeing robust demand for silver. Is that what you're
Absolutely, absolutely. Silver investment demand, has been very high across the Middle East and also across Europe. And of course, you're asking me about other markets, so it's important to mention US. 25 was not the year for US. We saw a lot of inflow because of the tariff-related thing in the early part of the year and then flowing back to the London walls. But in 2026 onwards, because silver was added as a critical mineral in the United States, there is possibly going to be a huge demand in the United States, along with Middle East, Europe, led by Germany, and of course, India. The story here is very clear.
But if I can ask you this, while yes, absolutely, a lot of these markets has done phenomenally well, right? There are like markets in East Asia, like Thailand, Indonesia, some of these where silver investment is not really talked about because of the taxation, right? Have all done well. But do you think that this is a structural shift, or do you think that because prices was doing what it was doing, right, this demand has come in? So how much do you think is sustainable?
That's a very good question. Based on our research and, we feel it is a structural shift where the demand is going to be sustained for several reasons. Of course, the geopolitical environment that we're all sort of living in today, and that will drive sort of investment into safe haven assets. Silver finding a new sort of aspirational value, like I was just saying earlier, across institutional investors in Middle East and Europe and elsewhere. But I think there is also going to be, there is this expectation that even today we are probably sitting at a GSR of 63, 65, wherever we are, gives a healthy, upside of wherever between 5 to 20% underpricing. So I think it is the rush to silver is going to continue, and we definitely see it as a structural change. And also with the gold price being so high, silver is getting a lot of the lag demand.
Sure. Faisal, digital silver has picked up quite a lot, right? And in many markets, we are now seeing innovative products coming in, for silver, for gold. But there is actually no regulation as such, right? From your point of view, what is it that industry really needs to look at to safeguard investor interest, but also longevity of some of these products?
So I'll start with where Manit left, that there is a structural change that we are seeing. We need to understand what is that change. The confidence in investing in silver has increased. Now, let's understand who are these investors. We are looking at a 300% increase in Middle East, 6 times increase in India, and as Chirag mentioned, who are these investors? 70% of the investors, according to his experience, were in the age group of 25 to 35. Yeah. That's the Gen Z, the new generation. They are smart. They look at ChatGPT before doing anything. And what is most important here, to sustain this demand, to scale it up, is not a technology issue. It's not about how good is my app. It's about the investor protection. And how do you build that confidence? So they will look up, you've got multiple players in the market, they will look up who is backing it, who is behind it. The credibility is important. So when we look at investor protection, it comes from a few things. The custody, so who actually holds that particular silver? Who is owning that silver? What's the legal rights? Is that silver which is held somewhere, is that auditable? What are the redemption rights that we have? So if these points are clarified, we'll increase that base. If we look at India, we look at where is the demand coming from? Western part of India. So Mumbai, Ahmedabad, Gujarat, we are looking at South. This is an educated generation which will look at all these factors before investing. And what is important is having those regulations in place. When we look at regulations today, we are looking at regulations related to the technology platform. But that's not the real case. What we need is the regulation that boosts the investor confidence. We do have regulations. If we look at India, there is SEBI, which as you have on the gold side, EGRs on the electronic gold receipts, you have even on the ETFs on silver, there are circulars. But what happened in November 2005, particularly on 8th of November when the circular came, the alert, it cautioned people. And we were worried, will the investor demand change? No, it has increased, it has not reduced. So which is showing that people need to do the right thing to give that confidence, the credibility in digital silver.
But do you think that probably an SRO may help it, or do you think a proper regulator has to come in place for digital products in India?
See, it's an SRO would definitely, it's a good starting point, right? Yes, regulations, see what we are looking at, scalability and sustainability. Wearing my consultant's hat, supporting this industry, what I'm looking at is fantastic opportunity today, but how do we sustain it in the long term, right? How do we scale it up? And for that, the regulations, if we put too onerous regulations, then it will fail. So we need to make it practical. We need to look at things where the investor confidence is increased. So where people are confident that yes, we have a regulatory body which is supporting this initiative. This is the future.
Yeah, sure. Chirag bhai, if I can, I wanted your view on this point that, as Manit pointed out, right, we've seen Middle East massive increase in silver investment demand, right? If you were to put your global hat and look at it objectively, right, not with your bias as a silver trader, but objectively, do you think this is a structural shift towards silver, or do you think this whole jump that we've seen in demand outside India, it's more just price driven?
This is a very good question, brother. Thank you. So yesterday in one session, when Amar was taking the session with you, we checked the costing of the silver. When you're mining it, it is at $12. We are at 75 today, right? In order to get to the answer, if it is a structural shift, or it is going to continue, or it is going to stay, is very hard to answer. The only reason is there are so many factors which goes around it. One is, if any government comes and says, I want to put this as a critical mineral, then it is of whatever cost of mining is on the side. But let's say if it is just an investment demand, if I ask you, it is $12 at a cost and right now it is 75, would you buy it? If with that logic, you'll not buy it. With the recycling or mining going surplus or deficit, with that also, you'll probably not make up your mind that it is a cost of $12 and I'm buying at 75. But the small changes which is affecting very slowly is that the one structural change which might happen in coming days when there is some global currency issues coming in, if anyone wants dollars, if anyone doesn't want dollars, then this might give a more propelling things to making pure structural changes to it. Then we'll not look at the cost of it. Other than that, silver getting in uses which is everyday changing, which we saw yesterday when you were speaking. So I'll just tap that only here. That changes, if keeps happening, then I think this is a pure structural change which is happening in the precious metal market. At the same time, if nothing happens, then this is not a reliable price, which everyone knows, including you, that it is not a real price. But this would end up somewhere being more structural changes, and this will continue, is what I see.
Sure. Gagan bhai, I wanted to, one thing which we often talk about when we talk about gold, right? That South is the biggest consumer of gold in India. Rural demand is probably 50-60%, right? For silver, as one of the India's largest refinery, which pockets in terms of regions you see is one of the biggest consumers? Also, how does silver shape vis-a-vis gold? Is it more a rural buying or is it more urban buying?
So for us, Chirag, North India has been the highest buyers, and it has been all across,
right,
rural as well as urban. And the second market has been the Eastern India.
Okay.
Third has been Western India, and the fourth is Southern India. That's the kind of breakup we have for our sales.
Right.
So whatever we did last year, about 83 tons, 82 tons of bars and coins. So most of it, like maybe 50% or 45% was North India.
Right. And these are essentially investors who are coming from larger cities, or you've also seen a lot of interest from tier 2, tier 3 cities?
Tier 2, tier 3 as well.
Tier 2, tier 3 cities as well, right? Amit, actually, last year we saw, because of the high premiums, ETFs had to shut inflows, right? I want to put you on a spot and ask you this thing that current regulations only allow LBMA gold, right? Please correct me if I'm wrong. LBMA gold and silver in ETFs, right? Is it then time, given the fact that now we're in a market where flows are becoming tighter, silver market is already in a deficit, right? You don't know what is going to happen to global policy, right? Is it then time for India good delivery bars to be accepted by ETFs?
So just split into two parts. First, definitely we have seen the pressure in October and November, but it was fund of fund which were closed. ETFs as a nature were not allowed. That's why we have seen a lot of spread at that point in time. And what we have seen, the good part is, again, it's regulated by SEBI. So SEBI have taken a lot of action post that. So now we are allowed to take ETC and futures as well, up to 40% if the same scenario comes. So that I think will really help us if we go into that particular scenario. And now they have again tweaked on the INAV side. So when benchmark earlier used to be LBMA, now we can do domestic. So that's also a positive side for ETF. So these two things will definitely help us if we go into the same scenario. We're more than happy to go into the same scenarios. That's what bring more investors into this market. Obviously, I don't want to enter the peak, but I think with every challenges, SEBI have done something which helped this industry in various phases. So that's what I feel that now we are much more in a better position to manage that kind of a liquidity.
Chirag bhai, what is your view? Should India gold delivery, good delivery bars be allowed?
Yes, very much yes. So not because of the kind of a situation what we witnessed, but because we are evolving, our ecosystem is evolving. We have larger refineries into the country. Then why not to have that support to the Indian manufacturing ecosystem, right? Right. Obviously, if I have given a chance to put up a case to it, I'd love to take a lead.
Right. Gagan, actually, we often, and Ankur highlighted, right, that we've seen impurities in a lot of silver products which are there, right? We saw recently the news in Vaishno Devi temple, right? Why is consumer still buying these kind of products? You offer world-class, bars and coins. What is it? Is it that the consumer lacks education? If the things have changed in gold, why is it really not changing in silver?
So, Chirag, the first thing what you said, definitely the consumer lacks education. Because when they go, example, you've taken a Vaishno Devi's example. They go there, to offer any of the temples or whatever big temples we've seen. Like Chirag also knows, we were working with Ambaji,
yeah.
We got Vaishno Devi, and a lot of big temples, and people go there as offerings. So when they buy these from those shops around, they're not very sure about what actually, they're charged for silver, but not the actual price of silver of that day. They get a discount on that, and there's a lot of mol bhao and everything which goes on. So people think that if you're getting a better price, you should buy. But actually, the lack of education is that they don't know, actually, they're not buying silver.
So probably industry should, really start an education program, right?
Definitely it should. Definitely.
Nalin, there is an interesting question, and since you are a listed company, I want to ask you this. So the question is, the cost of production is $12 and silver is trading at $75. Do you think it is better to invest in listed mining companies rather than holding physical silver?
So, see, I'll not go into the cost of production part because silver is a byproduct of our mining from lead and zinc. So it is one of our, as you call it, free metal in general mining language for us as well as our, counterparts in the business. From the point of price, if you say that, it's produced at a heavy arbitrage and then sold at market price. Definitely that is the benefit we have, and we believe that prices should remain stable. When you ask the first question that do you change your demand production versus the prices, the answer to that was no, because we believe that prices should be stable and that's how we produce. We don't believe that prices will be high and then that is why I should produce more.
Right. Navneet, you want to answer this? Probably you come from a financial services company. Do you think it's better to hold shares of silver mining companies, or is better to hold silver?
I think silver in form of ETF has given you phenomenal return, but if you see, generally a mining company, if the underlying moves by 25-30%, you see at least 50 to 75% jump in the mining company stock. This typically happens with industrial metals. To name a few, copper recently moved by about 30% in a matter of 6 months, and stocks which mine copper moved by 2x almost. Yeah. And it has a lag effect. It moves in couple of quarters once the price movement has happened. So it's not a lost bet as yet. If you anticipate silver to move higher, you know which companies to invest in.
Sure. Manit, so last 6 months we've seen massive volatility in silver. Silver prices have also corrected sharply. Do you think all the high beta nature of silver, does it really impact interest in silver among investors, or do you think investors love this about silver?
The volatility in silver, that we are seeing in the last 6 odd months, has been, from very different headwinds and tailwinds. And I think the investors, by and large, are smart to understand what is driving it and to see the bigger picture outside of the noise. I think, the volatility, I don't think it is going to take people away from investment. Where silver stands today, I definitely feel that, given the macro picture and visibility of silver going forward, I think it is not going to affect flows in. We'll continue to see volatility. I think that is definitely part of 2026. We are going to see highs and troughs, but in balance, like I mentioned earlier and like we've been discussing, the macro demand is going to be definitely driving the prices up.
Actually, this question is first to Amit and then Chirag Bhai, if you can comment on this. We've seen this sharp drop in silver prices, right? But you've actually not seen investors go and buy, right? Because if people were bullish at $100, $120, these are $70, $75, right? People should be actually running to the stores to buy, right? Or ETFs, there should be a lot of money coming into ETFs. Why do you think this has happened? And we've also not seen this in gold also, so it's just not silver. Amit, please.
So typically we have seen in all the asset classes, not only gold, silver, equity. Whenever there is a euphoria, everyone talking about that asset class. You open any Instagram in October, November, every second guy is talking silver is going 5 lakh, 6 lakh, gold is going to 2.5 lakh. So that euphoria, people, you in first question have highlighted the FOMO. So a lot of people that are missing out, let us buy it. Now the challenge is when they entered, we have seen the asset class sometimes correct 50% in 3-4 days. So that's what happened when they see this might be a correction. They try to enter 1 or 2 times. But then again, the amount is quite small, and the kind of return they have seen, correction 30-40% in 2-3 days, put a lot of panic. Had it been a slow movement, might be they have entered, but like in 2020, we have seen 40% correction in the market, no one entered. When the market again bounced back 50%, 60%, then only investor entered into the same way. So if you see a bounce back, then only retail will come. Institutional investor you might see might be taking some position, but retail definitely chase post returns are there in the market.
Chirag bhai?
We Indians we are emotional. Okay. So every time when in my 18 years of career, what I have experienced is, जब भी भाव ऊपर जाता है, whenever the prices go up, people try to sell. Okay, let's have a profit booking. This is the first time ever that a retail investor is joined the rally. It has never happened until I know. It has never happened in the past that you join the rally when prices are going up. So at $60, I'm still expensive, but at 65, okay, I'm anticipating 75, I'll jump in. This has never happened. This usually happens with the institutions, as Amit rightly said. This has never happened with the retail. Second point, that why investors are not buying at today's level. So it is we are at a price cycle, and it is very price sensitive. At $100, we were thinking was again we'll be repeating 2011. Price will correct 50%. It has happened once, and now there is a cycle. We are at 75, I believe. Now if we correct to 65, 68, I think we will see 30-40% of what we have witnessed in last 2 quarters.
Navneet, what's your take? Also, one additional question to you is, at what price point, probably range, would you see investor interest again, coming in?
Today we are living in a world of instant gratification. Okay, the world of internet and Instagram has changed it. So as typically prices, people were chasing at 90, 100, $110 also and were investing into ETFs. But today at 65, 70, they are not very comfortable because they want instant returns. And this has been the phenomena of the market, not only just for commodities, but for equities and other asset classes. So once prices start to move up again, that is when we see retail participate once again, or HNI, Ultra HNI start to participate once again. Even if it comes down to 60, you will see lower participation only. You will see a handful of investors who are very smart and savvy, that this is a bargain hunting buying and let us jump for it. But otherwise, retail generally, when they have a technical level or when the influencer community starts to pitch this product once again, which typically happened in November, December, once they get onboarded, then this product might start seeing some traction. Because as of now, we don't see it going the way it has in the month of April, October, November and December. There will be no major fireworks. If that has to happen, it is going to take some time. So the investor interest is going to be low for some time now.
Faisal, I wanted to, probably have your quick take. From a regulatory point of view, right? You sit in Dubai where the government has done quite a lot to support the industry, right? Probably 2 regulations that India should, incorporate here to actually promote, the Indian bullion market. What would that be from your point of view?
See, there are 2 layers at which regulations exist in Dubai, right? And which has worked successfully. One is at the physical asset level. So at a federal level, you have the regulation around the physical assets. So whether it's gold or silver, precious metals, which includes the legal rights, which I mentioned about the custody, about the AML controls, the KYCs, those are the regulations which is for the asset, the audit requirements, particularly in the precious metal sector. And then we look at, from a digital asset perspective, the tokenization part. So you have the VARA, which is the Virtual Assets Regulatory Authority, which is looking at tokenization. So what we were just talking about, why silver, there is a demand. You see, the price is less. If I'm buying 1 gram of gold versus 1 gram of silver, psychologically, you want to hold a gram, for example, right? Yeah. So, but when we go into the fractional ownership, then you will see a different market scenario. So I guess 2 layers of regulation, one at a physical asset level, and second is at a tokenization level, which will tremendously help.
Sure. Amit, there is a very interesting question. It says, how do we analyze differential rates among ETPs? Because this is one question with a lot of investors have, right? You look at different ETFs, they all have different, prices. So how do we analyze differential rates among ETPs and local spot prices during periods of increased demand?
So you're talking about the INAVs which we declare for ETFs. Yeah. So the best part is for the retail investor, 90% don't know what is INAV. So they only know the trading price. We have seen the days when some of the AMC's funds are trading at 10% premium to the real price. So we try to educate a lot of the clients to understand what INAV is. And that's why I said that now SEBI have introduced to add futures and ETCs to improve the liquidity. So the best part is whenever you're buying ETFs, do see NSE as a website because NSE is a mandate for all the AMCs to publish INAV. If the spreads are higher, it's better to avoid that particular AMC and look into the AMCs which are going very close to INAV. And now the regulations are also coming up again to publish INAV, which were not there as compared to equity. It is mandatory to publish every 10 seconds. In silver and gold, it is 4 times a day. So which is again now coming into a regulation discussion with an MF that how we can improve that as to give a more purity. So in a coming time, you might see that we regularly publish INAV on the website of NSE and on the AMC. So that's the way one can see that how it is trading.
Navneet, probably during such times, is it better to trade futures contract than buy ETFs?
Well, absolutely. In such times, it's a derived price and it's a fixed formula between what the COMEX prices are trading and what the domestic prices are. At times, MCX tends to trade at a premium or maybe undershoot during the kind of volatility, but it makes more sense when you don't have major clarity over how INAV is behaving, then probably MCX also comes to it. But it's a derivative product. Let us understand that derivative has a rollover cost attached to it, and it's not very savvy for retail participants or people with low ticket size. So in case you are very comfortable with derivatives, it makes sense. But otherwise, maybe ETF is a very good option to trade for.
Sure. We've actually run out of time, so very quickly, all those people who can give a price forecast, we'll start with Nalin. Can you give a price forecast? Next year, where do you see silver prices? I'm sure you would like a $100 silver price.
So as a producer, definitely, if you ask me what price do you want, I think, anything in triple digit is very good. And we have seen those things in Q3, Q4. But as a, miner, like I said, that we prefer to have stable prices in a positive side. I think, a range of $75 to $80 and a slow rise towards $90 is what we feel should come through.
Amit, can you give a price forecast?
So a similar answer, because we are managing a retail money and we don't want volatility to be there. So if an asset class which give a consistent 8 to 10% return, eventually give more comfort to the client. So if this asset class able to give that kind of experience, then eventually SIPs and other asset things will start coming into this. So I would prefer to be more stable than to be volatile.
Manit, can you give a price forecast, a point forecast next year, April, where do you think silver could be?
Next year, April, I'm going to be a little contrarian and a little more optimistic. We see it probably around 110, that range.
Okay. Faisal, do you want to try?
Yeah, not my domain, but still will. See, look, looking at the trend and looking at the way the things are going, looking at geopolitical situation globally, etc., I see it's on the rise. So it will be between 100 to 110.
Navneet, what is Motilal Oswal forecasting?
Well, I think prices were a little ahead of themselves at 120, and I think stability-wise, maybe 65 on the lower side and 90, 95 on the higher side is where we see prices hovering the next 6 to 12 months. So at best, 95, 90 is where I see prices in the next 12 months.
Gagan?
So looking at everything, should be about $90 to $100.
$90 to $100. Chirag bhai?
We are touching 120 again. Maybe we pass that, hopefully. But I see 110, 120 at least.
Perfect. Great. You have the panel, $100 to $90. Hopefully next year we'll be in 3 digits. Thank you very much, gentlemen, and thank you very much.